Welcome back to another edition of the Friday Five, Super Bowl version. So if you are a Chiefs fan or Eagles fan, hope you enjoy the game. I am a Giants fan, so I am ready for this NFL season to be over. All right, we're going to jump right into mortgage rates, averages from Mortgage News Daily, as I use on a weekly basis. So conventional 30-year fixed, 7.03%. That's down from 7.05% from last week. FHA 30-year fixed, 6.39%, down from 6.46%. And then VA 30-year fixed, 6.41%, down from 6.48%. So a little bit of an improvement there. We've seen some inflation reports improve slightly. Some jobs reports come in a little bit weaker than expected. So it's helped a little bit. We shall see how things progress going into Q2. I'm optimistic, but time will tell. Number two, this is a question that I get fairly frequently when I'm in a social setting, when people find out or if they know I work in mortgage. They'll ask if I think now is a good time to buy a home. Oftentimes that's a first-time home buyer, and I think the first place that you have to start with that question, whether it's a first-time home buyer or a move-up buyer, is it the right time for you and your family? Like you situationally, you financially, is it the right time? I think you have to start there. And then beyond that, I think you want to look at two things from a market perspective: home prices and mortgage rates. Those are the biggest impact, especially when it comes to, affordability. And you ideally want to buy if you know that it's going to be more beneficial to buy now versus 12 or 24 months down the road. So I look at demographics when it comes to home prices, and the millennial generation is the biggest generation in the history of our country. Probably less than half of them have purchased homes at this point, even though they are in those life stages of buying a house. Last year, I think the average age for a home buyer was 38 or 39. And a lot of millennials are they're in the early to mid 30s, and they're starting families, having kids, and they're forming households. So I think there's going to be really strong demand for housing for at least the next 5 years. And you have Gen Z on the backside of the millennials, and that's a really good-sized generation as well, and there's going to be demand that comes with that. So the only way that home prices really go down is you have to have more supply than demand. So then I look at the supply side, and where does tons of supply come from? Is it baby boomers passing on or selling their current house and downsizing? Is it new construction? I just don't see a glut of new supply coming to the market, and I just think that home prices are going to continue to appreciate, not as much as they have the past 5 years, but I think they will continue to appreciate a couple percent every year for the foreseeable future. So I don't think waiting helps you from a home price perspective. So then I think you look at from the rate perspective. Okay, if I wait for mortgage rates to come down, will that help me? Well, I don't really think so, because I think a lot of people have that same mindset. And if all those people enter the market, that's just going to push prices up quicker. And I think waiting for rates to come down, that's a better option if you already own real estate, and then you can do a refi down the road versus waiting to buy till rates come down. So I think now is a great time to buy a house. I think it has to be right for your family, and I would just find the right house and not worry too much. You have to qualify and everything and make sure, you're going to be able to afford the payment, but I wouldn't wait. I don't know that waiting helps a lot if you're ready now. Number three, what's going on over at the CFPB? So the CFPB is the Consumer Financial Protection Bureau. And with the change in administration, with President Trump getting elected, the old CFPB director, Rohit Chopra, is out. He was relieved of his duties. Scott Bessent was appointed acting director of the CFPB. Scott Bessent also was recently appointed as Secretary of the Treasury, so he's kind of working in dual role there. And he issued an order this past week to halt all bureau activities at the CFPB unless they had approval from him or they were required by law to move forward with whatever they're working on. So a lot of people are asking, does this mean the CFPB is shutting down? No, I don't think so. I don't think the administration has the ability to just close the CFPB, they definitely can reduce some of the funding, especially because the funding comes from the Treasury and Bessent is in charge of both. But it is pretty normal for there to be a pause within the CFPB when you have a new administration and a new acting director of the CFPB. They'll go in, evaluate what they're working on, and they'll make sure anything that they carry forward aligns with that administration's goals. So the Trump administration definitely has some different goals than the previous administration, but I'm hopeful that the CFPB, stays intact, has a reasonable amount of funding, because I do think they serve a good purpose in protecting the consumer and also protecting businesses that are conducting their affairs the right way. If there's no enforcement and there's nobody policing the mortgage business or other industries, the bad actors just run wild, and I certainly don't want to see that. Number 4, what are the basic components of a mortgage payment? So if you've had a mortgage and you made mortgage payments, I'm sure you already know this, but for some people who have never had a mortgage, you may not realize all of the components that make up that monthly payment. So the first primary component of the mortgage payment is the principal and interest. So that's what you pay back to your lender to pay down and eventually pay off the mortgage. But then you also are going to have a chunk of the payment that goes into escrow, which is essentially a savings account that the lender or the loan servicer sets up for you for property taxes and homeowners insurance. So if your homeowners insurance is $1,200 a year, then you're going to pay $100 a month into that escrow account, and over 12 months, you're going to throw $100 in there, and then when it comes due again on the renewal date, there's going to be enough money in there to pay the renewal premium out of the escrow account. Same for taxes. If your taxes are $4,800 a year, then your lender's going to collect $400 a month for property taxes. So, and then also if there's a homeowners association and there's HOA dues, that would be part of your housing payment, but usually you would pay that directly to the HOA, not to your loan servicer. Number 5, the quote of the week. I love this. Came across this on a podcast with Nick Bear. Sahil Bloom is the author of a book called The 5 Types of Wealth that just came out, and I love this quote. He said, "Focus on direction, not speed. It's better to climb slowly up the right mountain than to climb quickly up the wrong one." So love that quote. You got to be deliberate in what mountain you're climbing. Make sure you're climbing the right one, because it takes a lot longer to climb back down and go up the right one. Thanks for watching. Have a great weekend. Please pass this on if you know someone who's potentially looking to buy real estate. If I can help you anyway, I'm happy to answer any questions that anyone has. Just DM me. Thanks.